I have seen hundreds of bad deals on the market, and these 5 mistakes are responsible for 80% of them. They are so simple to understand that if you go through them and understand the proper frame how to approach real estate in Dubai, you will not lose money. And clear understanding of these 5 points will save you days of self-research, and most of brokers even do these mistakes. So we shall start with the most massive mistake, and it is tools and girls mass. You don't use all these tools simultaneously, right? And you don't use screwdriver to put down the nails, and you don't paint wall with a duct tape, right? But when it comes to investing in properties, it's exactly what people are doing, and then wonder why property doesn't meet expectations. So all the possible options of frustration come from expectations you set without understanding what kind of tool is each property you look at. And the biggest mistakes people do investing in real estate, they mask goals and tools to achieve them. Now, this is the very point of this video. Thank you. That's it. If I got your attention, this example is clear. Let's understand how to create tools and goals match. Actually, I couldn't find any video addressing this massive mistake. So there are so many people on the market who paint walls with hammer and complain about hammers don't work properly and hammers in general are bad tools. So what goes wrong? Flipping, renting out, or personal use, these 3 possible goals why people are buying properties will have a completely different selection of projects to consider. Again, property investment is not a Pantene Provision Pro 3-in-1. You cannot achieve all goals in one bottle. So if your goal is flipping and capital appreciation, you need to pick a totally new area as well as the very first projects in the area introduced to the market. Developers will be giving fantastic payment plans or lowest possible prices that will increase with each new building in the area. Next important point for flipping that not all brokers and agents understand when advising clients, only a limited number of developers fit this goal. Let's say those who sell a 3,000 apartments condo and call it undervalued investment opportunity literally have no understanding where they are putting their clients' money into. A developer fitting flipping model is not about quality, but there are important points in sales policy to consider, and the quality even can be average or below average. How do you know that area will perform and appreciate? That's next important point. It always must be a strong infrastructure or anchors of area or some other factors that will be constantly pushing area's average price up together with the growth of price per square foot in your particular project, so that these 2 combined will give you 30 to 50% price appreciation by time your property is handed over. By the way, a possible casino is a bad example of area's anchor and growth potential. We'll do a separate video about that, but idea is following. Evaluating projects, also think about potential risks. If your investment performance solely relies on one area's anchor, what happens if something goes wrong with the anchor? Is there anything else that will support prices? When today in mid-2024 investors ask me for the best options, I advise only 2 areas that will gain the maximum price appreciation, and I can't share them here because it's my time, my analysis and value that I share with my clients. If you want to learn more, a link for property consultancy is in the description. Now, if you are looking for a cash flow and your goal is a rental income, then the strategy is a bit different. You will be buying on secondary market or later launches from developer in that area that will have high demand for rent in future. As an example, a seaside property where you have 200 meters working distance to the beach side. For renting out, you need a 30 to 60% developed area. When your property will be ready in 3 years approximately, the area will be developed by, let's say, 80 or 90%. Why not consider buying at the cheapest price at the very beginning of area's development? I'll tell you, by the time your project is completed, the surrounding area will be looking as a massive construction site. It will be the middle of area's development. No one wants to rent property in the middle of construction site and pay high rents. So for the next 2 or 4 years, you will generate almost no money and your financial model will look like a disaster. If you will calculate investment efficiency in annual returns rate, so for the next 2 or 4 years you will generate almost no money and your financial model will look like a disaster. If you calculate your investment efficiency in annual returns rate, infrastructure, schools, food and beverage outlets should be up and operating before you start renting out your property. Now for the last goal, for living in Dubai, you can go for properties with the same approach that I described before, or to pick 80 to 100% developed area. Or, money-wise, you can buy the very first projects, but you should be ready to wait for at least 4 or 5 years till community will mature. Unlike first two scenarios, here you really need a quality developer, and there is a limited number of developers in each price segment that will deliver exceptional quality. And tricky part is that the best quality of development might not necessarily mean highest appreciation. In Dubai it works differently. Now all these can be called proper entrance to your investment. Like in any investment, it should have entrance point, lifespan and exit point. And almost never people calculate proper exit point, and that is next big mistake. Timing. Let's say you are buying for renting out. People say I will buy and hold and have steady cash flow. This is the very common mistake. No, cash flow is not even through years, and it's a mistake. Any rental unit should be considered to be sold in 5 or 7 years maximum after first rental deals. Dubai is developing very fast. In 5 years, you will face increasing maintenance costs such as AC, cleaning, repairs, refurbishment, minor fixes, replacement of parts of furnishing, etc. So it means your rental income will be decreasing. If you agree with it, it means when you are buying for renting out, it also should be a place, area or developer that still has potential for price appreciation. Do not buy properties for renting out in old communities and old buildings. For example, like Marina. No further appreciation. Infrastructure is old and touristic demand will be shifting in 2 or 3 years to other areas that are being developed right now. Exit point for flipping is another topic to cover. We can always discuss on one-on-one consultancy call, the link is below, but general idea is following. 1 year prior to handover or till the big final payment is the first exit point. Another point is to wait till area gains maximum attention from end users and sell then, not on a handover. The example for maximum appreciation is popular area called Blue Waters. The appreciation was not achieved right on handover, but after all the food and beverages started operating and it became a walking and dining space that attract attention. Now to save your money, you can consider paying upfront to developer, and developers encourage you with 5 to 10% discounts to do so, but be careful, there is a next big mistake coming. Upfront payments for property in Dubai, it's also a common mistake. When you buy property with 100% upfront payment, if you are sure that you're totally secured in your finance and income, then in no case you will need to resell this property before completion, then you're good to go and to get this discount. But if you don't have this certainty, do not pay upfront, as it makes your property impossible to resell earlier than handover time. You are stuck. On secondary market, there will be more units like yours, and buyers will have a choice to pay 50% on a deal and remaining 50% in installments to a developer with another seller, or to pay 100% to you and buy exactly the same unit. So it makes no sense for them. Mistake number 4 is all-in-one developers. I see big search volume in Google and YouTube that sounds like who is the best developer in Dubai. Forget that. There is no such thing as the best developer. Every developer is just the same as the tools I showed you in the beginning. They match or don't match specific tasks. Nahil, Shoba, Emar, Miraz, Ellington, Bingat, DH&HP, Emar, Omniat, Select Group, Imtiaz, Iman and others, they are all good at achieving some goals and a complete disaster for some other goals. For a short example, Emar is the best master developer of communities in terms of quality of infrastructure. But for non-branded projects, for personal use, I would rather pick Shoba for the quality of finishings and interiors. Shoba is still developing its competence as a master developer and evolving fast, but existing communities have some planning mistakes that make MR better choice if you like to walk, to cycle a lot around, and the resale value, if we look at this point, is also better in Imar's project, while for the price to rental yield ratio, Shoba is winning. But Imar's approach and strategy for sales policy is way better, and it's balanced between all groups of users, early investors, those who buy for renting out, and end users. There are some developers that I don't work with. They ruin balance between these groups, and it makes your investments in their projects unpredictable. And the last thing I will mention is the first thing you need to start with. To make your way through all these nuances of real estate, you need an expert on your side. how to choose one among tens of thousands agents in the market? Of course, you can always call me, but general idea is following. If it's an investment for you, find a real estate expert with investment background. Investing in real estate does not differ from other investments. If you are investing, not buying for personal use, but for making profit and returns, common logic is following. When you invest in stock market 1 million USD, you don't do it based on your fitness instructor or dentist or your girlfriend's advice, right? Same shouldn't be an option when investing in real estate. Ask a broker whom you're working with this question. If you're giving me investment advice, can I please know what is your relevant investment background? What did you do before joining real estate? What prior experience or professional education makes your advices qualified? Did you manage people's money in any investment area before? Because selling homes to live in for many years do not count. It's not professional investment activity. Makes sense? And I need to clarify, it's important if you're looking for investment advice. If you're looking for a home to live in or a vacation option, it's totally fine to stick to advice of experienced realtor who is in the market for 5 or 10 years and knows what he's doing. But again, for investment advice, I would suggest following advice of brokers who have relevant background. Based on answer, you will have a first needed impression. And if you consider working with me on your investment in real estate, my contacts are in the description.